Hey everyone, and welcome to my channel. So this video, I am going to talk about how to value a company. This is something that a lot of people who have followed the channel and people on my social media page have asked me before. And also when I have commented on other YouTubers' pages, I've gotten a lot of questions about this whenever I start talking about whether a company is overvalued or undervalued. Now, there are a few things that I need to say before I show you how I value a company. The first thing is that there are different ways to value a company. Some people will value a company based off of 10 times revenue, or they'll pick some multiple and then they'll multiply the revenue, and that's what they think the company's worth. There are other people that look at the service that is provided and see how much of a value the service itself is. Is the service going to be high demand, or is it something that's going to stagnate over the next 10 years? The third thing I want to say is that stocks go up and down independent of their value. And what that means is that even though you buy into a stock that is overvalued, you might still make money on it, because the stock market, the price of the stocks are predicated on supply and demand. If more people want to buy the stock and there are more people buying the stock than selling it, the stock price will generally go up. And then if more people are selling the stock then people are buying it, then the price will generally go down. So these are three things to keep in mind. Now, my way of valuing companies actually bypasses a lot of these things. For instance, I look at the service to some extent, but I just think that the numbers are the best indicator of where a company is at financially. And when I buy into a company, I am buying into a company so that they can share their profits with me. So whenever I pick a stock, I make sure it's profitable. I make sure they have good equity. They have more assets than liabilities, in other words. So I look at the balance sheet, I look at the income statements, I look at their website, and I mainly just go by the numbers when I value a company, rather than PR or anything the actual service itself or anything like that. So that's something that I just want to keep in mind as I go into this. Now, whenever I show you how to do it, you may decide to value a company differently. But the point is that you have to have some sort of method that lets you know about how much a company is worth. And what I will do is I will go and I will look at the the operating income of the company. And the operating income is the income that the company has after expenses are paid. So I'm basically valuing the company off of the operating income. And then I take that operating income and I multiply it by 6. And then I add the equity on the balance sheet to that answer. And that's how I get the value of the company. Now, I've been doing that since about November, so I haven't been doing it for very long, but every stock I have picked using that method is up except for one. So the method seems to work very well, and I actually got the method. It was inspired by Shark Tank. I watched Shark Tank, and I would notice that a lot of times when they valued a company, it was somewhere around 6 times revenue. Now, a lot of the companies that the sharks deal with in Shark Tank are startups. So obviously, a lot of these startups don't have a lot of assets. But when you're dealing with the stock market, with companies that go public, generally these companies do have a lot of assets. There's one company, a real estate company in Israel, and its market cap is lower than the equity of the company. I mean, the company has like $10 billion in equity, and the stock market has it valued somewhere around $1.4 billion, I think. It's just ridiculous. How could a company be worth less than what it actually has in assets? It's just stupid. So that's just a good way to see whenever a company is undervalued. So we're going to go through a few stocks, and I'm going to show you how I value these stocks. We're going to go through some big players in the stock market, and you might be surprised to see that a lot of these players, such as Apple and Google, are actually massively overvalued right now. But the good thing about knowing the value of a company is that you know exactly when to buy and when to sell. You know whenever you're going to be selling at a profit in relation to the value of the company, from what you bought into it to what you sold it at. And you'll know exactly, if you like to buy low and sell high, you'll know whenever the company's at fair market value and when it's above and you can sell it. If you're a dividend payer, you'll know how to buy into companies that are undervalued so you can get a greater share of the profits for the dividend whenever their stocks goes up and when that company raises their dividend. So let's go ahead and look at a few examples of companies and use my method to value the company, and hopefully this will be a benefit to you. Alright, so let's go ahead and just go through this real quick. I'm going to show you what I'm doing so that you will be able to see exactly how I value a company, and then you can decide whether you want to employ this method or not. So what I do when I first look at a company, we're looking at Apple Incorporated. It's one of the biggest companies in the S&P 500 index. It has a market cap of nearly $1 billion. You look at the market cap here, $1 trillion, and it has a market cap here of 806 billion. So is this a reasonable value for the company? The market capitalization is what the stock market values it at. But what the stock market values a company at and what the actual company is worth is often two different things. As I said in the beginning of the video, the stock price is often move independent of the actual value of the company. So let's go ahead and look at this. I'm just going to show you guys how I do this real quick. I've already explained what I did in the very beginning of the video. So the first thing I go is to the income statement. And you can find this in any sort of brokerage website, or even on Yahoo Finance. You can find this information. So you don't have to do it here. I like Charles Schwab's layout. It's very clean, and I'm used to it because I have used Charles Schwab for a long time, so I'm pretty comfortable with it. So the first thing I look for is the total operating income of the company. Now, with a lot of financial companies like banks and whatnot, it is not really a total operating income, so I just look at net income for banks and things that don't have that label there. But for this, anything that has a total operating income, this is what I use. So I take the total operating income and I multiply it by 6. All right, so let me go and pull up my calculator. And all right, so now this is valued if you look at here, you always want to look at this stuff. The values are in the millions. That means for every one, if it said 1, it would mean $1 million. So this means this is $70,898 million, which would be equivalent to an operating income of $70,898 million. All right, so we take that and multiply it by 6. All right, and we get a value for the company so far of $425.388 billion. Now, you see what I did there? You could just do the regular numbers if you want, but I don't like playing with huge numbers. I like to just put it into a decimal form, which is what I did here. So since it's $70,898 million, I just went ahead and put 70.898 instead of just having the comma there, or just trying to write out the entire number. But you can do it however you want to. All right, so I'm going to do this one more time so that you can see this. All right, so we're looking at the total operating income, $70.898 billion. That is what I am going to use. And I'm going to multiply it by 6, and so far I have a valuation of $425 billion. But Apple has assets, so we're not done yet. We have to add the assets on there. All right, so if we went from the income statement to the balance sheet. Sorry, my cat just got on my desk. I had to throw him off. Anyway, so the total assets of the company is $365.725. So it's $365 billion and $725 million. Now, we don't want to do total assets because there are liabilities and there are debts. So I want to know what the equity is. All right, so I go to the total equity. This is the difference between the liabilities and the debts and the equity. So here we have a positive number of $107.147 million. So we're going to go ahead and take that equity right here and add this on. So this brings us to a total valuation of $532 billion and $535 million. All right, so that is our value. So let's go ahead and compare it to the market cap and see how this stacks up. All right, the market cap is $806 billion, but we have it valued at $532 billion. So this company is overvalued. That's right, Apple is too expensive right now. So I would consider investing in Apple if it were at a fair value, but right now it is not. And look, if we went and bought this, it was a $2.25 a share, thinking that when it was almost $1 billion market cap, it was a good deal. Look at how much money we would have lost. And people could lose more because the company isn't even worth $800 billion right now. Sure, Apple's a great company, but it's not an $800 billion company yet. It's just not there. So one thing I want to point out is whenever you're looking at a company, you want to make sure that you're not in quarterly. When you do the math, you want to do it on an annual basis for both the income statement and the balance sheet. You can see here that you have a quarterly and annual option. This is what you want to do, because if you do it just off the quarterly, off of one quarter, you're not going to get the right valuation for the company. So just be careful with that. And this isn't the only thing I do when I pick stocks, but this is the main thing, is you want to make sure you get into any company, no matter what it is, you want to buy in at a good value. That's the most important part of being an individual stock investor. So I'm going to look up one more, and I'm going to look up one that I think is fairly valued right now. I think it is. I haven't checked it lately. Let's do Bank of America. And this is one of those examples I said may not have total operating income on their income statement because they're a bank. So the accounting is done a little differently than other companies because of how regulated they are. You see here, there's no total operating income for Bank of America. So what I do, net income. You can do either net income after taxes or just regular net income. I just usually do net income. And let's go ahead and see what Bank of America is worth. So remember, these are every one number is millions. So this is not $28,147. This is $28,147,000. I'm sorry, $28,147,000,000. So let me go and add this up and see what the valuation is. All right, so we take the 28.147, we multiply it by 6, we get 168.882. And we're going to look at the balance sheet. And we're going to look at total equity. $265 billion, and then $325 million. So let's go ahead and add that on as well. All right, so Bank of America should be worth about $434 billion. Let's look at that market cap, and look at that. The market cap's only $281.7 billion. So there's a lot of room for growth here if we take the actual value of the company into consideration. So this would make Bank of America, at least as far as the value is concerned, a good investment right now. Now, there are other things I look at too, like I'll look at how it does compared to the S&P 500. You can see right here that it lagged, and then now it's doing better. You can take that and do what you want with it. But you can always check their past performance and see how they do, and then decide whether you want to invest in them or not. Now, I'm going to show you an example of a company that's in distress that you should not invest in. This is Sears. You guys may have heard that Sears filed bankruptcy, but they got a rescue plan in place. Hopefully, it works out for them. But I ain't gonna take the risk right now. So I never invest in a company that's losing money. If I see a company, one of my holdings starts losing money, look at this. I mean, what a mess. Good Lord. Good Lord. They almost lost $2 billion in 2017. They did better this year, to their credit, $430 million that a loss. But, you know, who's going to invest in a company that's losing money? Who would, hey, this company's hemorrhaging money, I want to sell it to you. Who's going to, I mean, seriously, I would never buy into a company like this. All right, so that's like negative $2.58 billion right there. If we take the 430 and multiply it. And actually, I'll show you how I would do this. And I don't really even do this with these companies because, like, if they are losing money, I'm not even considering them an option. So I won't even go this far. But just to humor everybody, all right, we're going to do negative $430 million. All right, so I do this since it's in the millions. I'm doing the numbers behind the decimal point. The billions go in front of the decimal. Okay, so I'm going to go and take this and multiply it by 6, 2.58 in the negative. All right, and then look at their equity. They're just drowning in debt, people. Why would anyone buy this? I don't understand. Oh, well, let's just go ahead and add this on anyway. So, I mean, technically, they're not even worth anything right now. Yeah, they have a lot of assets, but they're so far in debt, they're not even worth anything, and they're losing money on top of that. So, I hope that Sears can be rescued. I did like the company back in the 90s because my dad would go there all the time, and I loved going to the mall. We had a University Mall in Pensacola, and Sears was one of their anchor stores. I really enjoyed going to Sears because I like to go to the mall, and I'd go to, like, EB Games, or what was it called? Babbage's, right? Wasn't it called Babbage's? The old game store before GameStop and stuff came along. I think it was called Babbage's, and then it became EB Games. But anyway, so this is, look, I mean, good Lord, why would anyone invest in this? But you see, though, the market cap is $107.1 million. It ain't worth anything, people. So this is not a good investment right now. Now, if you invest in this and they happen to recover, you can make a good bit of money. Look at this; it was up 14% today. So any option traders that bought the stock at a lower price today would have done very well with Sears today. So it doesn't mean you can't make money with Sears. It's just I wouldn't consider Sears a good long-term investment. And look at that beta, 2.55. That's more than twice as volatile as the market is. So yeah, definitely wouldn't be investing in this. Anyway, though, so that's pretty much it for this video. So this is how to value a company. I gave you a few examples. We may revisit this topic in the future. as more questions come up. If you have any questions, just feel free to leave a comment below, and I'll answer them as quickly as I can. Because I do want you all to be able to learn this, because if you want to put this into practice, I just really want to see people benefiting from this. Obviously, this is not professional investment advice. This is just my opinion. But I hope you all have a great week, and God bless.